Well, you guys are tired of hearing all my bad news. Then I get castrated after, so I'm going to let somebody else tell it this month. Funny story, last week I was having coffee where all the beautiful people hang out, Del Mar. I was at Starbucks, minding my own business, having coffee with another investor. And I'm kind of looking away for a minute, and here's this homeless guy walking up. Man, that was bad. Maybe I should buy him a cup of coffee, you know. But I was feeling benevolent, you know. And as he gets closer, damn, he looks awful familiar. I'm going, phew, that's Robert Campbell. You're heading for where, the gym, or where are you going?
The bank.
Yeah, exactly. I knew he wasn't homeless because the only thing he was carrying
deposits
was a fat stack of checks, literally.
Yeah,
so I was like,
really two.
You can buy the foo-foo coffee. So then he sat down and we started talking about real estate and what really was going on. For those of you that don't know, in 2005, this guy saved my world. I had read his book in 2003, wrote it all down, made notes in my back then Palm Pilot of what to look for. He'd actually quantified 5 things you can measure to tell where you are, the health of your market for real estate.
First, I want to let you know, some people call me a doom and gloomer. I call myself a realist. And for those of you that think like I mean, just show you how I manage my own money. I'm not saying this to boast, but if I'm a doom and gloomer, I've doubled my net worth in the last 3 years. So if that's
for a homeless-looking guy.
Yeah, for being homeless and doom and gloom and afraid to do anything with your money, I very actively manage my money, folks. I move it in and out of markets. I believe in timing. And when I'm thinking, what's going on in the markets nowadays? In the next 5 to 10 years, unless something changes, I would not be a long-term investor. I'd be a short-term investor. In other words, you're going to have to follow trends.
Talk about why, please.
Because I think we're going from here to here. But even during that period, I think we're going from this standard of living down to a standard of living probably in the 70s. But during that period of time, there's going to be counter trends where you're going to be able to make money as opposed to lose money, or leave it in a bank account that's yielding you 0%.
So what you're advocating is stay short-term?
Short-term. And with respect to real estate, I don't know that my strategy that I do, in my spec account, I take about half of my spec money, which is about 25% of my net worth, and I use that money in real estate. I do hard money loans, or I'll do fix and flips, wherever the opportunity is. And the other side of it, I actively manage my money in the securities market. I make about 20% a year. And when my spec money in real estate isn't in real estate, I put it in my stock market account, and I'm doing that. But it's all active, short-term stuff, guys. This buy and hold, I think the buy and hold guys in the next 5 or 10 years are going to be really sorry that they did that.